We are live, ladies and gentlemen. We are live on the tube. I attempted to fuck around with Kick for a little bit, and I finally was able to get a stream to work after adjusting some settings. I think I may have adjusted those settings, and maybe the stream will work better here today. I don't know. We were having problems the past couple weeks. Maybe it's my Wi-Fi. Maybe I'm an idiot with my settings. I don't know, but we are good for now, and we are here, and we are live for Power Hour, and yeah. So, I don't know. I might use Kick in the future. I might use YouTube. I'm thinking the reason why I was kind of thinking about that was because I just don't know if I feel like YouTube kind of messes with you when you try to do a lot of things on the same platform. You have different people who want to watch different things. For example, different people want to watch a live stream versus different people want to watch a video versus different people want to watch a recap. People want to watch shorts. I would rather have one place for each of those categories. Personally, just for cleanliness, I like having it all on one like platform, but it might be better for the sake of the reach if you don't. I don't know. We're been here either way, so it is what it is. What's going on, Millen? Spy pushing. I have a recap coming, but essentially today we had 3 trades, we had 2 break evens and 1 winner. I attempted, or I played an NVIDIA short off of this rejection as NVIDIA's in a bigger picture downtrend, and I played the rejection. I haven't traded that many times much at all, and it happened on high volume. I had that earlier. I played NVIDIA long, actually, believe it or not, here, which it should have worked. I realistically should have made money on this trade. I was targeting like about 15 cents higher, like literally right here, and it stopped just short. So that's on me, but I stopped out break even because I moved my stop loss to break even. So I had that, and then I had a BYND, believe it or not, a short on that one today, which was good, and it came within 3 cents of my take profit, and then reversed completely. But overall, big picture on BYND, it was a good idea because it had the breakdown underneath some pretty key levels right here. It's just that it didn't hit my target. I missed my target by a little bit, by a couple cents. You can see here's the trade, and then after missing my target by a couple cents, I moved my stop loss to break even, and then eventually came back to break even. So not a big deal. Wasn't a stock that I traded heavily, so I was like, I'm not going to worry about it too much. Either it's going to go break even or I'm going to make money on it, and it ended up going break even. So, dude, I hope like CrowdStrike's not messing with the stream. How are they doing, by the way, chart-wise? What's going on, Flippa? Hope everyone's doing well on this Monday, July 22nd. Yeah, they're getting crushed again. Jeez. I mean, overall, that chart does not look up. I mean, it doesn't look good. Big picture, especially after like it failed the 300 level, and like last week it broke below it, and then it came back. But once it kind of it lost that level underneath this volume node. Whew. Got open seas down here if it really wants to die. Even more volume on it today, believe it or not. I honestly, though, had I not talked to anybody who was having this issue, I legitimately would not have known about what was going on. I don't know if I would have figured it out. Maybe I would have, but like I was kind of oblivious to this whole news because it didn't affect me at all. So I was like, I didn't realize there was a problem, but now I recognize. I figured that out at this point. But yeah, I attempted my first ever Kick stream about 30 minutes ago, and I streamed for 20 minutes, and that's it. I'm gonna try it again. I'll be back. I'll keep going on it for a bit. I just don't know if I'm gonna be totally down to swap over there, because I also don't know if it's a better user platform than YouTube in terms of like a viewership perspectives, because I don't watch Kick. I don't know. I don't also really watch on YouTube very much outside of, well, I don't watch streams on YouTube. I don't watch streaming in general either, like in general. But a lot of people, airlines were affected. I didn't realize that. A lot of airlines, except Southwest, were affected pretty bad. And my parents were saying they had to fly last minute for a week, unfortunately. and they were saying how they were looking at flights, and they're like, these flights are so expensive. And then you're like, well, everything was backed up from last week, so they kind of got screwed and had to pay a lot more than what they probably should have been paying for where they're going. But it's unfortunate. It is. I was looking at, I think I'm getting very, very close, like exceptionally close to pulling the trigger on the Hawaii trip. I just don't know when I want to go. And that's what I got to figure out, because I can pretty much go whenever I want, but I'm trying to figure out, like, obviously, like, I will fly during when it's probably cheapest to fly, because I can fly whenever. But I have to iron out, like, exactly the details. I was gonna go originally. My plan was to try to go to. Well, I've been to Maui before. It was insane. I loved it, but I don't know if I want to go back to Maui again. If I'm going for the second time. So I was like, okay, let's go somewhere else. And then I was thinking, okay, Honolulu or Oahu is like not the main island, but like the more populated island. I guess you can say it's the main island. And then I'm like, well, I don't want the city vibe at all. I want less people. And then I was like, oh, let's go to Kauai. But Kauai has like much more expensive in terms of like doing what I want to do for what I want to do. And I'm like, I don't need that necessarily. And then I was like, well, let's go to the Big Island. And the Big Island seems to be where I'm going to probably go. Not as cheap. Like, I can probably get it cheaper. I can probably go cheaper in like Maui, to be honest, with the way I wanted to do it, in like a van, like rent like a van. But then they have like all the problems like campsites, and you're not allowed to sleep in your car in most parts of the island. You have to have a campsite. And I was like, well, I would rather just at that point get an Airbnb and just not have to worry about parking and camping and just having a bed, for like 5, 6, 7 days, whatever the time I'm going to go. But that's the plan. And also it would be good if I want to do it in the wintertime, like, or post daylight, or whenever the clocks change, so that you can have like, I can see how bad it would be to wake up at 4:30 in the morning for when the market opens in the East Coast. Not that I would be doing very much trading, I would imagine, during that trip, but I don't know. It'd be kind of interesting to see how it would be. But yeah, the Big Island has a lot. It'll be more driving for what I want to do, but I want to learn how to surf. That's side quest A. I want to be in nature. I want less people, and I want more of like a holistic experience versus like touristy and people and shit. People have to say like those. I've always been saying like for a while that I've always said back when I was in Austin, back when I was like, back when I graduated, even before I graduated college, I was like, I feel like I just need a solo weekend, couple of days, like almost with no anything, like no technology if I don't want it. Just to think, almost, or not even to think, to be honest, just to chill. Because one thing that I've learned a lot, I think the past couple of months or past year or so, is that a lot of people, or the society in general, is kind of conditioned not to think a lot and not to be like intentional with your actions. You kind of get caught up into like whatever you're doing, and then you kind of fall into this just like this cycle, and like you fall into a routine and whatever. And I like routines, don't get me wrong, but part of my routine, I feel like I should be, or part of someone's routine, I think you should add, whether that's daily, weekly, monthly, yearly, like time to think about a lot of things that you're doing, like just honest with yourself. Like, do I like this? What should I be doing to get better at this? If I want to get better at this, do I want to get better at this? Just in terms of all that, no one taught me. And that's kind of part of society. No one taught me, and no one teaches you throughout your life and schooling, unless you have a mentor. But throughout traditional schooling and college, to do that, you kind of just do what everyone's doing, or you follow the path that you think or you're told is like what you should do. And then you don't have time to say like, do I actually like deep down like this shit? Do I want to do this? Or am I just doing this for this so I can get this? And is that the best way to live? Yeah, whenever I say that, I'm like, whenever I talk to my mom about that, I'm like, yeah, mom, I think I'm gonna, I really think, because the one time I went, I was like, Hawaii is awesome. I was like, I might move to Hawaii, and she's like, oh, I'm never gonna see you, blah blah blah, like, how a mom would be, which is fair. I get it. I'm like, well, okay, not necessarily. If you want to come to Hawaii, I mean, that's an excuse to come to Hawaii. So I'll visit you, but if you want to come to me, it's probably more convenient for all of us because it'd be a more enjoyable time. But either way, she always says that. I'm like, I know, I've heard it, I've seen it, but why? When I was there, like almost 2 years ago, I literally almost 2 years ago now to the day. This guy, we had a tour guide for like a snorkeling trip, and he was asked the exact same question, or he was said, oh, well, isn't it very expensive on Hawaii? Because he was like, in late 20s, maybe 30 years old or so, and he's just like, yeah, I moved out here, a year or two ago or a couple months ago, and the guy was like, yeah, well, isn't it really expensive here? Because he used to live in Louisiana or something, and the guy, he's like, yeah, it's expensive, but you can't put a price on the smile on my face every day. And I'm like, this motherfucker knows, like, he's living life. He's like, he's got it figured out. He's snorkeling, taking people on snorkeling trips during the day or whatever else. I'm sure he can, if he has maybe other jobs too, or side jobs or whatever, or he's moving around in different companies, whatever, and just living the dream. Who cares where what exactly your living situation is? If you're having fun, you're liking it. But yeah, I'm sure there is the people out there too, depending upon where you are, like, they kind of, it is really unfortunate because the more that you look into like the deeper part of it, the whole, like, the islands in general, the locals are slowly getting just like kicked off and like kicked out because it's just too expensive to live there. And it's really unfortunate because people come in and they just buy like up all the property, buy the mansions and buy the houses, and then rebuild them, make them cooler, put them on Airbnb and stuff, because it's all money, it's all an investment to someone else looking on the outside, which is really unfortunate, because then the local person who's just wants to live on the island and just have a chill, simple life is the one who's getting run out of town, can't afford rent, can't afford taxes or this or that, or their homes, unless they've already had a home. And then there's the whole Lahaina town that got burnt down, which people who had homes there, all gone now, and who knows, that property will get bought back up one day and they're kicked out, they're no longer there. It's really unfortunate when you think about it. So part of that whole thing is like being respectful to the locals and everything, because their lives have been dramatically changing over the years too, and it's all for the fun and games of the tourists who come in and want to fucking see all the beautiful stuff and then leave and pay whatever. But I don't know, man. I gotta go and see, and if I go one or two more times and I'm like, yes, this is it, then that's maybe what we decide to do. I don't know. Or maybe it's a place where I don't mean to be the same investor guy coming in, but maybe it's one day where I get a second property that I live in half the year. I don't know. I don't know if you'd want to live there the whole because I think tax wise and stuff, I think you'd want to have property like in a state with maybe no state income tax, and that's like where you live, and then like you have a second place, like a condo maybe in Hawaii or something like that, ideally. G8 stocks aren't paper trading. A couple of days. That's not a bad way to start, dude, because the thing about like the way it kind of works is when people start off, they tend to actually see some good success because you honestly don't know, like, you don't know enough, but that's to your advantage. Like knowing too much ends up hurting you. So going deeper down the rabbit hole of like trying to learn about different strategies and setups and technicals and risk management methods and stuff, what I would recommend realistically is whatever you're doing, obviously it's working right now. Will it work forever? There's no way to know unless you track it. The best way to do it is to track, but when you start tracking, track doing like the same thing. Like you trade the same way, meaning if I'm trading breakouts, I only trade breakouts, and I will track that. I track every trade. Is it a win, loss, how much I made? Maybe you can track time of day. I use TradeZella. I have like an affiliate link to them below all of the streams and videos and stuff, but you don't have to. You got to pay for it. Like if you don't want to pay for that, that's fine. You don't have to, because when you're starting out, maybe you don't want to pay for all this shit. They make it easier. Like on me, like for example here, like they make it easier for me to be able to like see things and track my P&L and track my trades and stuff. But you don't need that. But if all you're tracking is essentially, no, log me out, is your dollar amount and win rate, and then your risk rewards, like you're going to get a pretty good sense of whatever you're doing is providing. And then from there, you can adjust. What I would do is, if I can go back, or if I had like a project, like person almost, that I could like, if I had a clone that I could like recreate myself and go back 6 years ago and be like, what would I tell like myself to do? I would tell that person, or tell myself, to trade one way, trade one strategy, and then track that for, months, like literally months. And then, well, if you day trade like 3 times a day, you're going to get more data. So maybe you don't have to track it for months. Maybe it could be a couple of weeks or a couple of months, and then you'll have enough data to say, okay, it's working or it's not working. And then from there, you'll see the intricacies of like, okay, what's good, what's not. Start to eliminate one by one what's not working. Maybe it means, okay, I don't trade during lunchtime. I don't trade during power hour. I don't trade on Fridays. Whatever that number, what that variable is. And then eliminate one variable, track it. If it improves, awesome. And then eliminate another variable or add a variable. I think doing this could make my strategy better. Do that, track it for a period of time. Great. The last thing you would want to do is go on a losing streak and then go, I got to change everything, and then go completely clean slate, change everything. I don't think that that's going to be very helpful, because there is literally no strategy that is going to work all the time. You're going to have, if you have more of a dip buy approach or more of a breakout approach, there are going to be periods and seasons of the market or days or weeks where they work really, really well. And then there are days where they don't. And it's all about managing your risk when they don't work well, identifying when it's not working well, so you don't give away your whole account on those days or weeks or months. And then when things are working well, you're there to capitalize, and you're going boom, 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 and collecting your money, essentially. And then net, you're going to have, hopefully, good results in the long run. Hopefully. That's what I would do. It's less about trying to learn more about different strategies. Like, when you're brand new, you're probably going to go to somebody and find a strategy. But what ends up happening is, once you pass that stage, you kind of have your own strategy, and that's how it has to almost be. Because everyone thinks about things and sees it differently, the way things play out. And when you have your own strategy like that, you make those critiques and those adjustments based off of your data, how you see things, not how somebody else is telling you to do it. Because like someone else can tell you like, yo, you should probably risk 1 to make 2 or 1 to make 5. That's stupid in my opinion, because you might suck at that. Everyone says, oh, you're not looking for a 1 to 2, meaning you're risking 1 to make 2. What are you doing? Like, if you go for a 1 to 1, if I went for a 1 to 1, meaning I risk 1 to make 1, my win rate will be higher. If I went for a 1 to 1.5, my win rate will be a little bit lower, but then there's a balance of like, okay, it's a little bit lower, but it's still good enough to where it's profitable over the bigger period of time. And so that's kind of where I fall, but that's me kind of falling into that like crack after, doing it for a while, getting a lot of data, and then adjusting one variable at a time. I was looking at the ignorance is bliss, dude. I'm telling it legitimately is. And that's people say like, oh, back when you start trading, you start off and you're good or you're making money because you honestly don't know enough. And then you easily can get in your head and start second guessing and doing all these different things once you start losing. And then it's like a spiral. Awesome, dude. Awesome. Yeah, I mean, there's a lot of, I have a lot of old videos. I do trade recaps on every single trade that I take. So you can kind of see currently there's 2 prop firm accounts that I'm trading on, a $10,000 account and a 25K account. And so you can see kind of how I manage my risk, my sizing, and all that stuff per those accounts. I'm soon, hopefully, going to be moving up to a $200,000 account. But I'm waiting on just making sure I get a payout from one of them and making sure I trust them, and all that good stuff before I decide to go with the $200,000 account, because it costs like $1,200 to do it. So just want to make sure I'm going with the right guys, essentially. New trading, it can be profitable, and the problem is that I think you kind of have to understand, though, that you're going to have to learn a lot, and it's not learn about the market necessarily, it's learning a lot about yourself. I think the person who does well faster, who can get there faster, or first off can be profitable in general, is the person who can learn the most about themselves and then act upon that, or then put like methods and barriers and walls into place so that they stay within those walls because they know themselves and they've learned about themselves. And then that puts them on the track, keeps them on track to longer term, bigger picture profitability, because you're not going to win every day. You're not going to win every, you can go, I mean, the whole point why I know it's on, like, in the grand scheme, the way people like to do things is, oh, I have a Discord and you can follow and copy my trades and whatever. And I guess you can look back at my past 16 months of tracking the stuff, and I could you can say, well, if he's profitable, then he could open something up and do that. The problem is that that's not actually helping someone. It's all it is helping me. If I did that, all it would be doing is helping me make money, which people are selfish. I get it. And hey, I could do that for a couple of months or a couple of years and make enough money and then check out and never be heard from again. Could do that. But it's like, to me, it's like, why, what's the point? Like, if trading is what it could be, then you'll be able to make so much money from it anyway, 3, 4, 5, 6 years into being profitable, because your scale will go up. And once you're 5, 6, 7 years into consistent profitability, you can be talking about trading with money that you never could have even dreamed of per trade. So it doesn't matter. Like, that's the point of those videos, is so you can see the thought process, and that you literally are not going to make money every single day, every single week, or even every single month. But it's the net, it's how you manage the risk and how you come out on top, hopefully, across a bigger picture, a bigger sample size, a larger series of trades, larger time frame. That's what matters. And not necessarily that this one wins versus this one. Because I don't care about, if I trade SPY, I don't care if this trade wins. Like, I don't. But if I trade SPY 5 times this week and I lose 5 times, okay, that makes me think to myself, maybe something's off here. I gotta take a step back. But if I trade SPY 10 times this week and I lose the first 3, but then I win 2, lose 1, win 2, lose 1, or whatever, and I end up winning 5 times and I lose 5 times, but I have good risk management, I'll be profitable at the end of the week. And that's great. And you might say, man, that's kind of shitty, whatever, with a small amount of money. But that's when as you scale your account up, hence why going from a $10,000 account on the prop firm to going from there, getting funded on that, to then moving to a $200,000 account dramatically changes the game. So if you had a month where you made $500 on the $10,000 account, well, you have to do the math as to what that would be on the $200K account if you just keep everything the same. Where's my calculator? If you made $500 on the 10K, times it by 20. Now you made $10,000 on the $200,000 account. And now that's meaningful money in today's society here in the US. I mean, like, depending on where you are, it's different. But like $500 could be great in like Bali, or Indonesia or Thailand, right? That could get you decently far. It's just that I don't live there, and a lot of us, I'm sure, don't live there either. Most of us don't live there either, And but even there, like, it's the same thing. Things just scale. we're used. I'm used to the things in the U.S. and how things are here. But you go somewhere else, things are more expensive, less expensive, most likely less expensive, but it depends upon where you go. Just be careful though with the idea of like, oh, I just need to make this much, because I've done, when you start thinking that way too, it's, as much as everyone says, oh, the stupid cliche, oh, the process over the end result, okay, but in reality, that's what will make you profitable and keep you in the game. If you're thinking more about your process and like how you manage risk over the course of a series of trades versus, oh, this trade making me money, or oh, if I can make a couple $1,000, oh, I'll pay for this. Like I have student debt as well. I could say the same exact thing. Okay, I just got to make this much, and once I make that much, I finish off the debt. And then it's not about that. In my view, it really is not, because I even on the prop firms, oh, when you hit the target, oh, I just got to get my account to this number. Once I get it there, once you start getting close to that number, things start to get a little bit more wonky. I've had it happen myself, and I can see it happen for a lot of people. Things get a little more wonky. You start maybe doing things you're not used to doing, and you're focusing on the end number, the end result, instead of the process that maybe you were focusing on initially that was working, but then you start getting ahead of yourself. And you can never, the market will always humble you once you start to think you understand it and have control over it, because you don't have no control over it. As long as your mindset's in the right spot, you'll be okay. Like you can figure it out. It's not easy. Most people never will, but with enough time, I think people, underestimate their abilities. Some do. Not everybody. Bitcoin's making a nice little run here, by the way. I have a target up around 69.5K, 69,420 to be exact. If we're really getting, if you're really going to get in, okay. Like, but why? People may ask, why is your target there? My targets, to be honest, I was just joking with my brother yesterday, because he's trying to get into trading and stuff too, and I was like, dude, sometimes my target has nothing to do with what I thought, like, has nothing to do with anything. It used to be, oh, my target was this or that, or it was, nowadays, I don't, it's about my risk first. So I say, what's my risk on this trade? And then I make my target after that. But sometimes after I start scaling out, I have like minimal like technical reasoning to tell you this is why the target is here. Now you can zoom out and say, okay, on Bitcoin, daily time frame downtrend is up around 71K. So selling before 71K is a good spot. In my view, yes. 69,420 just is a funny number. Why? I don't know. It doesn't matter. That would be a 3-to-1 risk reward for me, which I'll take that to the bank or to the trade recaps. So we'll see if it gets there. We got to go another like $1,500 on Bitcoin to hit my ultimate target. But I did take partial profits on this. Like 30 to 40% of my position is already off. I took that at 68K yesterday when I saw it hit. Back to that Hawaii thing, by the way. You're talking about a small, humble little house. I'm looking at, there's a Airbnb that I was looking at that was like a tiny home. And I'm like, this thing looks like a tree house. It looks so cool. I'm like, for a solo trip, dude, that looks awesome. It even has like 2 beds in there. But I'm like, well, I don't need 2 beds. And one's obviously fine. Maybe, you never know. But no, but like a tiny house, because you're not going to be in there. Like my view of like living somewhere like that is you're going to be doing stuff every day or all the time. So I don't need a lot of room. I really, as I think about it, as I get older, obviously when you have a family, maybe one day, who knows? I'm not at that point right now where I'm either interested or in a position to like go down that route. But you really, as a single guy, I don't need much, dude. I don't need much. I really don't. The more I think about it, which is kind of cool because it makes it like fairly affordable, and like then you can spend your money on cool things. Like, what am I going to do today? Well, let's go learn how to surf, or let's go try this, or scuba dive, or I don't know. You can spend your money on I think, cooler things than an extra room, an extra apartment, like an extra couple 100 feet in your apartment. So. Synthetics versus currency. What do you mean by synthetics? I feel like I haven't heard anyone say it that way. But there's no better, one is better than the other, in my view. It's what you find better for you. Like for my strategy, like stocks work really good because I can gauge relative strength and weakness, and that kind of plays into my strategy, and it works well. For other people, like that doesn't matter, and in the grand scheme, it doesn't really matter because everyone's going to have a different approach, and a different strategy will work better. Like I have never tried my strategy on currencies. Maybe it would work, but as I think about it, I don't know if it would. I could try it. I can kind of go back and back test it. The way I kind of back test like mentally is like, we'll just go look at a chart over the past like couple of months or years and just see how many times I would have seen my setup playing out, and then would there be a trade? And a lot of times on currencies, I don't see my setup very often. Where on stocks, I do see my setup a lot more often. So I have more opportunities with stocks. But that's just kind of me. For somebody else, they might not see their setup a lot on stocks, but they might see it a lot on currencies. I don't really use much indicators at all. I have the volume profile and the volume on the bottom, and that's it. The visible range volume profile on the right. Otherwise, I just draw my lines, and that's really it. I mean, I've used, the 9 EMA for momentum and yada, yada, yada. Yeah, there's things. Like, don't get me wrong. They're not bad. I just find that the more indicators I use, the more I question things, and my head gets all messy, and then I start saying, should I do this? Or, well, this is telling me this. And there's too many conflicting signals. And it's like, House can be a cardboard box. Dude, cardboard box, hey, depends upon where you are. Cardboard box isn't a terrible look. People make it work though, but like the idea of like the tiny house is kind of cool. Not only volume pro. How can I use volume? Oh yeah. Everyone, like, there's different ways to view it, but kind of here's like my Nvidia trade from today. I played the false. Well, it had essentially failed to break out, and I played the reversal here. So I play breakouts, and so what I was looking for was like what I would usually look for is a breakout above like a key level like that, a consolidation breakout above here. And we kind of got it, but it was underneath high day, and also the bigger time frames weren't aligned. That's kind of irrelevant. You don't really need to know that. What you do need to know is that prior to this occurring, if the volume profile will adjust, which it will, give me a minute to let her load. And maybe she's not going to load. Okay, what I was looking at was if we started to fail underneath here, this little volume node, they call it a volume node, price tends to move faster through areas of lower volume as it tends to fill it faster, and it tends to move slower through areas of higher volume. So as we see, right, this is kind of a volume node, or as we call it, right? And price gets up here, and then it starts to slow down and mess around, chop around, and that's right in this volume node. Then price starts to come down, and then I was looking for a ultimate target down around 120.75, which is down in here, in the middle of kind of this like gap in the volume profile. And if you zoom out, what do? Price accelerates down, fills into this area, and now see how it filled up? See how that area filled up? If I go back, that area wasn't showing. Okay, watch. Get rid of these lines. See this right here? This little zone of like this kind of gap in the volume profile. So if I was looking for a breakdown and eventually, like, where could I target to the downside, this area seems like a decent target to me to fill that gap. Doesn't always have to happen. And as I expand price out, what ends up happening today, that little gap of that little circle is now filled in. It's more even, more uniform. So price, I use it as in price tends to move faster through gaps or volume gaps, and slower through volume nodes, or whatever you want to call these things, volume chunks. I don't know. You can call them whatever you want. I don't really care to get too technical because it doesn't really matter. I like him to align that on the bigger time frames too. So I say, okay, how do I see NVIDIA right now? Well, right now we got a little bit of a volume node right here, which could be an area of support or consolidation. Maybe we'll struggle to get below that level, but if it gets below that level, maybe we'll move to the downside, maybe move down to 114 area. And then if it breaks below that, maybe we have some more room down into here. If it breaks below that, more room down into here. And if we start pushing back to the upside, the higher we go, it seems like the less volume, so the more or the less resistance we'll see, the higher it starts to push. And maybe we can get more of a parabolic breakout to the upside. That's kind of how I like to use it. And there's no like one way that one size fits all. Maybe people think that that's stupid. I don't know. But that's kind of how I do it. But if you're creative about the whole like tiny home or the shipping container, wasn't there Home Depot a few months back or a year or two back released some like crazy, you can buy like a literal house that they can like bring to your property and just like install, and it's like a little house kind of like there's like a small, it's like a tiny home almost, but like it was a little bit bigger. I usually try to get at least 1.5. So risking 1 to make 1.5, depending upon the asset class. Like if I'm looking at NVIDIA, I'll look for a little bit higher. Tesla, I'll usually a little bit higher. Apple, a little bit lower. Google, a little bit lower. Bitcoin, a little bit higher. Depends upon what I'm trading specifically. And my history trading that thing, knowing it tends to move a little more aggressively or blah, blah, blah. The swing trade of interest, I would say right now would be Coinbase. The only problem is that I have a Bitcoin long, and so I don't really feel like I need to trade Coinbase because it's kind of like you already got it covered. But I do like the breakout here, and also earnings is not till August 1st, so you have you got a good period of time till earnings. You don't have to worry about earnings. I think we gotta run towards the highs here of the year up in this area. I think we can make a run there. If Bitcoin pushes up, that's kind of the thing. So then it's like, well, why wouldn't you trade Bitcoin? Exactly. So I default back to Bitcoin and say, well, just leave Bitcoin open and that's it. But Coinbase looks good. Coinbase looks good. In this case, this Bitcoin trade, it's a 3. I'm looking for a 3. So I'm risking 1 to make 3. Now, I've adjusted my target higher. So my original target was around 68K, which if I do the math on where 68K puts you, that's just north of a 2-to-1, essentially. So I took partial profits at 68K, and then I was like, I'm going to target a 3-to-1 and target just a bit higher. And that's kind of what I'm doing on the second piece of my position. But that's also because I'm looking at Bitcoin. I've seen how it trades, and I know you don't really have a lot of, well, you do have resistance up here, but the bigger trend line resistance is up here, and you got psychological level at 70K. I'm like, okay, if I was trying to target 71K, maybe I'm pushing it, but I think there's a chunk of room between right here and 70K that I think we can move through quicker. And then as we get to 70K, more of a psychological level, maybe some more resistance, and then we start pushing up towards a trend line. So it's kind of every situation is a little bit different. It's not completely uniform as much as, okay, uniform would make it better for like tracking it. I understand. But also part of it is too, it's like you're not always just tracking the uniform trade necessarily. You're tracking how you trade. So the longer you trade, the more you're unpacking like your tendencies and your pitfalls, that's what you're kind of determining. So I'm finding, okay, different time frames I'm not that good at, different assets I'm not that good at, different whatever. you know, I guess strategy's been the same in terms of setup, but you find those things out over time. But then the bigger picture is like, you can ask the question why. If you ask why enough, you'll find the answer usually in here, and it's in here. And like, oh, I was lancy, I was anxious. I get anxious when I do this, or I don't feel like I'm confident in the, you know, whatever. And so you end up figuring out like the deeper reason or the deeper problem or the deeper issue in your whatever problem, whatever, you know, issue you got, whatever, you know, thing you're trying to fix or improve. And the thing is, though, the short on Bitcoin, who knows? I mean, it all depends. It's not like I look at that too. People say, oh, really? And some people look at the breakouts that I trade and they're like, yo, dude, that you're just liquidity, blah, 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 blah. I don't care. It doesn't matter. The way I do it, I've optimized myself to be able to trade the breakouts in a certain manner with a criteria that puts me at a 45 to 55 average win rate. And really, it's been more like 45 to 50% win rate, but my average risk reward is substantially higher than a 1-to-1, meaning I make a lot more on my winners and losers, that I can be profitable with a 48% win rate. And I'm happy with that. I don't care. So that's just what I do. Now, if someone told me that I could have the same average risk reward and have a win rate of 52%, well, I would entertain it, and I would try it. I'd track it. I'd see. I'm not opposed to that, but I've just found what works for me right now, which will continue to be, you know, slightly change over time, changing, you know, one little variable here, one little variable there, and then tracking it one variable at a time. You could do, you know, $1,000 into a broker. I mean, you could. Back when I originally started in college, or prior to that, I had maybe less and then more. I lost all the money. I don't know. Back when I like really reset back in 2019, I had a couple $100 that I grew. Now 2019 through 2020 and stuff was a crazy time, but I grew that up to like 55K at one point. Lost a large chunk of that afterwards, but like you could. I prefer though that if you have no idea what you're doing or you're starting from scratch, paper trade, or if you throw $1,000 in, then don't trade that $1,000 like, oh, I'm gonna risk 100 to make 200 on this next trade. No. Okay, trade the $1,000 like it was $100,000. You know, I'm gonna risk 0.5% on my account every day, or I'm gonna risk 1% on my account every day, max, or whatever you're comfortable with. And I know it's gonna sound terrible and it's gonna be super small, but at least it's real money. And it's kind of like paper trading, because you're probably gonna, if you start with too much, you're more than likely gonna lose it anyway. So start super small, and you might suck for a year or two. Let's just say, with the $1,000 account, trading to make $5 on a trade, $10 on a trade, risking a couple dollars. Like, it might sound like, why am I doing this? Well, at least if you're trading with real money, at least. But it's kind of like paper trading, and you'll get that experience. You're going to get the reps, and you could suck for so long. And as long as you don't like risk your entire account, you might drop down from 1,000 to 700 to 800, 500. At least you don't lose that much money is kind of what I'm saying. Because you can always scale it up, or you can always go with the prop firm one day and then scale it up faster. And once you've proven it to yourself. Starting from zero back, my biggest recommendation would be to when you start playing that strategy is roll with that strategy as your core, and then one variable adjust at a time and track it. And as you do that, you're going to start to understand what the ins and outs of the strategy, when it works well, when it doesn't work well. My biggest problem, I think, and most people's problem, is that when things don't work well, they try to just completely change everything. And that's not necessarily the answer. The answer is more so within your psychology and risk management approach, and not the strategy, because there's so many strategies that could work. I could literally have a coin flip strategy. I'm not even kidding. Like, I can make up a coin flip strategy, and I'm sure like there could be some basis behind that working if you manage risk. You know, like There's something. It sounds stupid. People trade trend line breaks. People trade breakouts. People trade Fibonacci, this, that, the other thing. People trade ICT concept, like all these stupid stuff. Like they all have their place and they can work. Nothing against. Like there's nothing against. That's why like when I see someone with a strategy, I never like. There's no reason to talk shit about it. There's negative reason to talk shit. First off, you're putting out negative energy, which you don't need to be doing. And second, any strategy can work. It's about the person who's operating it and how they operate the strategy. What the criteria going into the strategy are, how they manage the risk, and all that. 45 with a 1 to 1.5. That's pretty solid, no, man. That's pretty good. That is the biggest thing. The cushion, that is the biggest thing, because the reality is like those might be your stats, and my stats are actually very similar to that, like big picture. But I was looking back through this past weekend, and my longest winning streak was 11 in a row, and my longest losing streak was 9 in a row, which is cool. I mean, okay, you had a bigger winning streak than losing streak, but knowing that, and knowing that you could technically lose 10, 11 in a row, it's possible. Like even if you're operating your strategy as normal as is and you have a 45% win rate, like it's still possible that you could do. It's very unlikely, but it's possible. Being able to stomach that's the problem with the prop firms, and where I think a lot of people go wrong, and how I'm treating mine differently, because on the one that I got funded on, I was maybe sizing a little bit bigger than maybe I still played it to where I would have to lose 10 trades in a row in order at my full, risk level per trade to lose the account. And I was like, okay, well, that's very unlikely. That's a good spot to be. Now, of course, you could lose. You can go on a month-long losing streak or whatever, or you can blow on one account. I don't have that problem where like I double down or triple down. I don't do that. My problem is more so the way I would get hurt or burnt would be I take too many trades when the market's not aligning with how I see things or my strategy, and I keep forcing stuff, and I end up going on a bigger losing streak, or I lose 20 out of 50, or I lose 20 out of 60, or 20 out of 100 trades, or lose 20 out of 30, maybe makes more sense. Lose 20 out of 25. Like that's where I'd have a problem. And it hasn't been like I haven't had that issue maybe as much, but people don't account for that. People don't think about that. They don't think, well, if I was to go on a 5 losing streak, 6 in a row losing streak, 7, 8, it's very possible you could. Am I sizing too large to where that would destroy me? And a lot of people's answer to that would have to be deep down, yeah, it is. So that's where I would say you just got to be careful. And that's how I always frame like a prop firm challenge. I always frame it from that perspective first. How do I calculate my sizing? Well, if I have a $10,000 account, and if I fall below $9,000, I lose the account, I'm going to risk $100 max on every trade. So that means I'd have to lose 10 trades at $100 a pop in a row for me to lose the account. Now, of course, you can go on a bigger picture run where you lose 30 out of 35, 35 out of 40, whatever, and then eventually lose it anyway. But I don't want to lose it in what could be just be a normal, oscillation in the market, meaning like just not aligning with my strategy right now. That's okay. That'll change. I don't want that to be the reason why I lose the account, because it doesn't mean that your strategy is bad. It doesn't mean that you suck. It just means that you didn't account for normal oscillations and variations in the market. As a miner, I mean, technically speaking, if you're being like real, I don't know if you can trade anything. Like you would have to have a parent sign off on it or open an account for you, I think, unless you're lying or whatever. I don't know. Back when I was 16, 17, my dad, I think I had him open an account for me. And then once I turned 18, I just I blew that entire account shortly. And then once I was 18, I think I had my own accounts, and that was really it. So I didn't have to worry about it. It was all under my name. But I don't know. There's really a way around that, to be honest with you. Unless I'm telling you to do something illegal, technically speaking. 40 in a row. If you lose 40 in a row, that's impressive. Like that's beyond impressive, honestly. Even like 12 to 20 in a row is freaking impressive, if you ask me. Because at some point, it's like, dude, just flip a coin. Like, don't even look. Just click buy or sell, and set your target and take profit, and like just literally leave the screen. Usually people end up going down that route because they start adjusting their they start moving stop losses and take profits, and then they say, okay, well, it's going in my direction. I'm gonna move my target a little bit higher just to make a little bit more back on this one, and then move my stop loss to break even or whatever, and then it comes back down, breaks even, and then you end up playing that game. But yeah, 40 would be nuts. That would be nuts. All right, it is 4:06 Eastern. I'm going to wrap things up. I have a Bitcoin trade that I'm looking for 69 plus. We'll see if it happens soon. I'm waiting on, I had a Bitcoin trade last week. I'm waiting on the recaps on those, so I'll stay tuned if you want to watch recaps. I'll have a recap out today on NVIDIA and BYND. I'll put it all into one, so I don't have to do two videos. Those are coming out today. So I'm not expecting a lot of action, to be honest with you, the next week or two because of earnings coming up. Tesla's got earnings tomorrow. Google's got earnings tomorrow. But I think after that, things start to heat up into August. I'm going to be away the first like week or so of August. And I'll just be watching charts, and I'll have hopefully a good list, and I'll set some alerts and stuff so that once we come back in August, we have at least ideas. Other than that, I know August has historically been one of my worst months. So maybe that's a good reason to just like not push pace in August. But I'll see you guys in the next one. Streams Monday, Wednesday, Friday for Power Hour, and then Tuesday, Thursday, I try to get in for open. Tomorrow, I may or may not be able to get there at exactly the open, but I'll stream in the morning. That's the plan. See ya.